of all, thank you for taking the time to sign up for this free video. And I hope that what I'm going to share with you is going to help you straight away in your business and you will take action. So today we are going to focus on a very important question that most companies sometimes have issues with. They are profitable, but they are cash flow negatives. And that sometimes means that a company can go under even if it's profitable. I'm going to show you straight away how to boost your cash and remain profitable at the same time. Okay? Here, the question is, we want to know how to boost your profit and how to get more cash. So first of all, before we go into before we go in depth, I'm going to do a quick summary of your financial statements and what they are for. Okay? Our question is how to boost or rather increase profit. Okay? Here we want to increase the profit. But first of all, what does profit mean? Right? So it is important to understand that in fact you have three main financial statements to focus on in your business that you need to really understand so that you feel comfortable with everything that I'm going to explain to you and teach you. So before we know what to do to increase the profit, we need to know that in your business you are going to have three different kind of financial statements. The first one is called your profit and loss statement. The second one is called your balance sheet. And then the third one is called your cash flow statement. Okay? So your profit and loss statement will tell anyone about what is happening in your business when it comes to your profitability. Profitability. Alright? This is for the profit and loss statement. The balance sheet is going to the balance sheet is more about what is happening in your business, so how you finance your assets in your business, so how you have used your capital, and if you have a lot of debt, that's going to appear in the balance sheet. And also, if you have a lot of inventories, how you manage your business on a day-to-day basis, based on the other side, the liability, so the money you have used, either from your pocket, which is your capital, or from the bank, which is the debt. We've seen here, so we've seen here the profit and loss statement, the balance sheet, which is how you, so it's about the assets and the liabilities. Meaning assets is what you own in your business, and liabilities is what you owe. So the money that you've used to finance the purchase of your assets. Okay? The cash flow statement tells you about the money that flows in and out of your business, which means from a cash flow perspective. Like if you have given credit to someone, he hasn't paid you that money because he promised you to pay you in 30 days, right? So again, if you receive the money in your pocket, you have the cash coming in, and that is going to appear in your cash flow. Okay, so everything that is cash. So it's inflow of cash. In or outflow, yeah? Alright, so then it is then important to understand the difference between here, the profit and loss statement, and the cash flow statement, because the profit and loss statement is telling you how much profit you've made, what the cash flow statement tells you how much cash you have in your business. And this is quite different. Now we are going to, so we want to understand how to improve our profit, how to boost the profit, right? So you want to increase your profit, and the profit is something that you can see in your profit and loss statement or income statement. Profit and loss statement or your income statement. Okay? So, as you have seen in my chapters, you have the revenues or your sales on the top. This is your first item on your profit and loss statement. And then you can have other revenues, except other, like income that comes from either investment that you have of your business or something that is not related to a sale. Okay, so this is your total revenues. Then you have expenses, and in expenses you can have your fixed costs, which is rent, interest expense. Actually, they are not supposed to be together, but you have the variable cost, like your phone bill, for example. So when you remove your expenses, so revenues minus expenses give you your profit. Okay? Alright? So revenues minus expenses equal your profits. And in order to obviously have a higher profit, you have two options. You can have higher revenues. That means either new products that you can sell, acquiring new customers, or selling or making a new promotions to, or like a new offer to your existing customers. Okay? You can either increase your revenues or obviously reduce your expenses. Then you need to go through every single cost that you have here and see if there is a way to improve or reduce or suppress a cost that you might not need straight away, or renegotiate a loan, negotiate to have a lower rent, move location possibilities. Monitor your costs so that at the end, when all of this adds up, so your expenses goes down. So if you, on both sides, increase your revenues and decrease your expenses, then obviously your profit is going to improve, right? So this is what you can figure in your profit and loss statement or income statement. You look at it, you know where your revenues are, what type of expenses you have, you go through every line and you know if you can amend it, reduce it, and then you can basically create your strategy about your business based on your first your first financial statements, which is the income statement. Okay? All right. So that was about the profit. So we know that we want to improve the profit, so we have to act or impact the revenues and the expenses, increase revenues, reduce expenses. Now, the question initially was, I do have profit, so we still, we went through the exercise of knowing what to do to improve your profit. At the same time, someone can say, well, my profit is good. In fact, it's improving year after year because you have figures across the last few years. At the same time, I'm cash flow negative. Why? Well, let's see that right now. All right. First, it is very important to know that cash flow statement is different from the income statement. Why? Well, I'm going to show you here, right now. You are going to see an example of an income statement and a cash flow statement. You see, first they look different and they are for different purposes. The income statements, as we saw earlier, is for the profitability, and the cash flow statement is for, very simple, the cash. You need to be cash rich. You can be cash rich or cash poor. Or you can be profitable, so it means high profit. You can be non-profitable, which means you can be loss-making. Sometimes one doesn't imply the other. So the question was, I am profitable, but I am cash poor. Why is that? Well, when you look at your income statement that you see right now, the profit is based on, as we saw earlier, revenues minus expenses. That gives you your profit. And when you either increase the revenues, decrease expenses, or do both at the same time, your profit improves. So you become more profitable. On the other hand, when you have a cash flow statement, it's about how much money comes in and how much money comes out. Sometimes, even though you have revenues, or you make a sale, you don't get the cash straight away in. For example, when you give credit to a customer. And this is called customer receivables. Okay? This goes in your balance sheet, which we will see which actually you can, I'm going through it in much detail in my program, 7 Golden Keys to Success in Business Finance, where I really took time to go in every single financial statement to explain the meaning, why, and the impact, and how you can improve your financial statements and get more money out of it. So here we are talking about the customer receivables, which basically means when you give credit to a customer, you've given him the product, he hasn't given you the money, but is due to give it to you. So he has a few days. So that's called this is the receivables. All right. So this is very important on your cash, because if you allow a lot of customers to take credit, you don't get the money straight away. So you become cash poor, because let's say at the same time, if you pay your suppliers earlier, or as soon as you're billed, then your liabilities will be quite high. So, and you will pay them straight away, so you will take cash out to pay your suppliers, and at the same time, you will not get cash in because you gave them credit. So this is very key for your business to understand, right? You have the customer receivables, which is in the balance sheet. So this goes in the balance sheet. On the asset side. And then you have the liabilities. So assets is what you own, and liability is what you owe. Okay? Right. So, now, your customer receivables is what comes here. Okay? My receivables. And this is what your customer, this is what you own, this is yours, this is your money that is coming, so that your customer needs to pay you. This, and when you need to pay to your suppliers, this is called your payables. Okay? Oops. So let's say that you have decided to give your customer credit, and you get the money in 30 days. On the other hand, your suppliers, you just pay them straight away. So it's 0 days. Nothing. So if you need to receive 200 from your customer, and you need to pay 150 or 250, or maybe the same, doesn't matter. Can be 150, 200, 250, doesn't matter. So if you need to pay them straight away, but you don't even get the money that you need, that you are due to receive straight away, because you're going to receive it in 30 days, then you're going to be cash poor. Because you need to go into your own money, in your own account, to pay your suppliers. And this is why you can end up being cash poor. Obviously, there are different items in your balance sheet that you can focus on and play with, so that you end up being cash rich and profitable. Okay? But these are essential things that once you understand how to read your financial statements, okay. Zero. Okay. So once you understand, these are essential concepts that it is essential for you to know, that you can play with to improve your cash flow, and your profit, so that you end up being cash rich and profitable and not the other way around. And just by knowing these few items in your balance sheet, you will be able to make extremely well without incurring further expense, without having to hire a business consultant. These are things that you can do on your own and very quickly, just by having a glance at your balance sheet, your cash flow statement, and your income statement. So now you know why sometimes a company can be profitable but cash poor, because he hasn't managed his cash flow by things such as his receivables, his payables, and, for example, his interests on loans is taken. Maybe he doesn't need them, or maybe he can renegotiate them. All of this are very important. So, and you can really retain much more money than you think. You enjoyed what we saw, and that is that you can, and you can use it straight away. Look at your receivables, how long credit, if you make credit, or what your interest rates are like, and so you can straight away improve your level of expenses, increase the revenues if you have new ideas of getting new customers, offering new products, and you can improve your profits and being cash rich. And this is going to make you even more successful in your business. So I hope you liked what you saw. If you want more, so you can have a look at my program, The 7 Golden Keys to Success in Business Finances. I speak to you soon. Bye.